Hello, it is the 15th of January 2011. Welcome to today's gold video. Technical analysis looking on both shorter and longer term time frames, starting off with the short term. And all of the gold bears are just loving it. Seeing the price drop about, it's only 4 or 5%. If you figure 1360 is the low and 1420 or so is the top, that's only about 60 points. Now, that's not that big of a move, so mainly gold is correcting through time, sort of like the silver market is doing, but it's at levels not seen since November of 2010. We have the declining 5-day moving average, we have a declining 10, and the 20, which was resistance in here. Well, she's going to be declining also. So now we're going to hear all of those pundits stating, guess what, folks? Gold is in a bubble. And, well, I guess when you look at this longer term chart, those same pundits would say, you know what? Why is it in a bubble? Look at this gain, folks. It is up way, way, way too much. Why would you want to be chasing a stock that has went up around 500% in only about 1 decade time? It just doesn't make sense to do so. Why would you want to do it? And well, we look at this technical analysis. We have an uptrend, consolidation, uptrend, consolidation, uptrend, consolidates, up. Nice little consolidation here, uptrend, and well, maybe this is the start of a consolidation period, but this is getting extremely, extremely bullish. And I'm going to talk about this gold bubble and make my gold bubble prediction now. Are we in a gold bubble? Well, within it, yes. But I use this type of analogy. Take a balloon, one that you're about to blow up, and you take one small breath and maybe two small breaths. And the balloon, which is very small, well, that's where we are within the bubble. Take a bunch more big breaths, and at some point you pop it, then the bubble will burst. But at what level will it be when it bursts? 5,000, 10,000, 14,000? I don't know, but to think that we're at a bubble at this level with the currency crises that we're currently facing right now, you know what? It just doesn't make too much sense that that's going to be the case. And after all, like I say, you look at this, it seems like it's up too much. Well, if you don't look at anything else, then of course it's going to look like it's up too much. After all, I can make this number 250 and this number 280. It would look like it's up too much. It would just show less volatility. And you want to see more volatility? Here we go. This is gold in the 1970s. From its bottom of $35 per ounce, that managed to get up to $800 per ounce. And it did this in about 100 or so months, about 110 months. That's what each of these numbers represent, our total amount of months from the big bottom. The 1970s bottom was $35 an ounce. The gold bottom here was $251 per ounce. And if it went up about over a 20-fold from 35, then a 20-fold on 250, well, that gets us over $5,000 per ounce. Now, I'm not saying that's where we're going to get to. Maybe we get there. Maybe we get a little shy. Maybe we well exceed that level. But if you're going to state a bubble in gold because a chart looks like it's up too much, or because some pundit on CNBC or MSN is stating that gold is up too much, look for hard evidence, hard facts that actually make logical sense before you state that gold is in a bubble. And for all of those people who state, well, gold has no intrinsic value. Okay, I will agree with you to a point. Because one, it does have some intrinsic value. It can be used Even outside of jewelry, it can be used. But when you're pricing it in dollars, you're talking about something that has absolutely no intrinsic value. So if we take, say, a billion, gazillion dollars, digitally we're speaking, of course, would that be worth more than a gram of gold? Very, very interesting. We take a look at it that way. And even if you state that it's got no intrinsic value, a lot of people believe gold is money. And as long as people believe it, then it will be the case. Now, people believe dollars have money, or people believe dollars is money. And less of them believe this every day. And the reason why it's less and less is because more and more people are waking up to how the dollar is created, how it's distributed, and how an interest debt-based system works. And when they figure that out, then where are they going to go to? Bonds or gold? Thank you for watching.